Hey there, how's it going? I was going over some stuff, I guess, just reading a couple of stuff, watching some interviews, and then I decided to just look at some of Stanley Druckenmiller's quotes. Then I just thought it would be a good idea if we went over that together. So, Stanley Druckenmiller, and this is from Forbes. He's a billionaire who is a great trader. I think he's in the top three greatest traders of all time, and I mean currency traders. He trades forex and stuff like that, but he's one of the best at it. He's made this much money. So if you're good by making money, bad by losing money, then he's one of the better ones because he's made so much money from trading forex. So he is a hedge fund manager for 30 years. He now manages his own money through a family office. And it's very interesting in that in this 30 years he was managing money. He never had a year where he lost money. In over 30 years, he only lost money in 5 quarters. And his average returns for 30 years was 30% compounded. 4.7 billion in his pocket. That's how he did it. So that's why he's really legendary. Never had a down year in 30 years. Never had a down year. He had 5 down quarters only. That's it. But his average returns were 30% every year. That's pretty cool. Given that the average returns of the S&P 500 is like 10% on a good year. So until 2000. He worked for George Soros. So George Soros, one of the most hated men on the planet, but he's also the best forex trader on the planet. Yeah, that's a fact. So Stan would be number 2 after George Soros. So the duo famously bet against the British pound in '92 and made massive profits. So George Soros is known as the man who broke the bank on Black Wednesday in '92. He shorted the pound. So in his defense, or in his appearances, he didn't defend himself. He said, yes, I did that, but then I only did that. I'm talking about Soros, right? He was saying, I only did that because if I didn't do it, someone else was going to do it. Because I didn't break the bank. What I did was see an opportunity through what was happening in the market, and I took that shot. So he says that he went public with it because some other people also made money from that investment, but George Soros said that he only told people that he was also in that trade because he wanted a platform so that he could become famous or infamous in order to do his philanthropic work. That's what he said. So yeah, so I just leave it at that. As I said, George Soros is very, very, very controversial, and yeah, it's got a whole squad of haters, and very few people who are on his side. So yeah, I'm gonna leave it at that. We're talking about Stanley Druckenmiller. So he shut down his $12 billion hedge fund to Kane Capital Management in 2010 and returned funds to his clients because he wanted to take a break. Okay, so yeah, so there's this other stuff, some Forbes stuff. He lives in New York, he's married, and he went to Bowdoin College and graduated magna cum laude. In some interviews I've seen, he always says that he's not so smart, but he graduated magna cum laude, which means he's kind of smart. But I guess what he means is that he doesn't have any savant knowledge, stuff that people think is like genius type level, So he's just saying yeah, he can work hard and do well, but he say that he's not so smart. Alright, a major donor to his alma mater, he has given more than 40 million to higher education institutions like Bowdoin, Brown, and Stanford since 2014. Alright, and is that all? In college, he used to run a hot dog stand for extra cash. Okay, good. Oh yeah, how did I miss that? Okay, so this is his net worth over time. It once peaked at 4.8 billion. That's in 2018. Right now he's at 4.7 billion. It's a lot of money, a lot of billions. So yeah, so now we're gonna get into his quotes. All right. I love being around kids. I couldn't figure out why old B 70-year-olds wanted to hang out with me when I was 27. Now I understand, and I'm trying to steal their energy. Yeah. Steal kids' energy. Alright. So, when we look at the Wikipedia page, we just see kind of like the same thing. No picture here, because you know billionaires don't like those pictures. But alright, here we have 4.4 billion for 2017. 2017, here Forbes says 4.7 billion. Alright, so this just talks about his college days. This is interesting. So he became a consultant at Dreyfus. Alright, he was first of all working in a bank, and he became the head of equity research group. He made his own firm, Duquesne, right? And then he became a consultant to another firm, Dreyfus. So he was splitting his time between Pittsburgh and New York, where he lived 2 days in each week. And he was giving us those returns. Those 30% a year, only 5 quarters down in 30 years, no year down, living in 2 cities 2 days a week. Wow. So it's interesting. But I guess he finally moved to Pittsburgh in '86, and he became head of this firm, the Dreyfus Fund, and he was still managing his other firm, the Duquesne Capital. And then he went to work for George Soros in the Quantum Fund. So, and then this is when they made that huge $1 profit in one day on a Wednesday. Yeah, so this is cool. So if you wanna check out more about him, I do recommend you read The Market Wizards by Jack Schwager and all of that, and I'll make a video specifically on that. But for now, we're just going over his quotes, some lessons that he has, and all of that. So his investment philosophy. All right, so he is a top-down investor who adopts a similar trading style as George Soros by holding a group of stocks long, a group of stocks short. So when you go long and short, and uses leverage to trade futures and currency. So he's a heavy currency trader. So as a currency trader myself, and having a whole world full of currency traders, he is pretty interesting, and so much that we can learn from him is important. So in early 2019, this is pretty recent, he had large positions in Microsoft, Abbott Laboratories, Salesforce, Delta Airlines, and American Airlines. Alright, so the source of this is from his Duquesne family office. Alright, so yeah, personal life, wealth, Pittsburgh Steelers. So yeah, basically cool. So this is what he's kind of like. But now I want us to go and just get some trading lessons, some advice, some knowledge from Stanley Druckenmiller. So he says, I've learned many things from him, George Soros, but perhaps the most significant is that it's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. Wow, this is very true. But this is accredited to George Soros, but he said it. So whose quote is it? But in any case, this is a very famous quote by George Soros. But George Soros is very reclusive. So we only know this through Stanley Druckenmiller. So, you know, it's knowledge, and what we want is to get knowledge, information, so that we can make better informed decisions. So this is very cool. Like, it's not about being right. As a matter of fact, I just remembered that last night when I was going to sleep, I was just remembering this quote randomly. So it's cool that it's the first quote that we're actually going into. Well, he does steal energy. That was the first quote. Yeah. But then I guess that quote is just referring to how you want to be in certain environments where the energy in the room, the energy of the people is electric, other than being surrounded by people who are sad, boring, you know, and stuff like that. So I dig it. So it's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. Very true. The way to build superior long-term returns is through preservation of capital and home runs. All right, preservation of capital, right? Your stop losses and home runs. So taking your time with a winning trade. When you have tremendous conviction on a trade, you have to go for the jugular. It takes courage to be a pig. So I'm assuming this is from, this is definitely from his Market Wizards book. All right, I'm 90% sure. And as I said, we're going to go over that book later on. But he's saying it takes courage to be a pig. When you're right, you have to be right. So the way to build superior long-term returns is through preservation of capital and home runs. So it's a combination. So if you're just preserving your capital, it's not going to work. But when you're correct, make sure that you stack the beans when that happens. And here is it's very true that it takes courage to be a hog in a trade. For real, it takes a lot of courage. It's not easy for you to like go all in, but you have to. So this is coming from the Druck himself, and from his superior returns over 30 years, no down quarters. No down years, only 5 down quarters in 30 years, yo. Some people aren't even 30 years old, but he's been compounding money at 30% average. That's pretty impressive. That is pretty impressive. Alright, I particularly remember the time I gave the research director my paper on the banking industry. I felt very proud of my work. However, he read through it and said, this is useless. What makes the stock go up and down? That comment acted as a spur. Therefore, I focused my analysis on seeking to identify the factors that were strongly correlated to a stock's price movement, as opposed to looking at all the fundamentals. Wow. Therefore, I focused my analysis on seeking to identify the factors, whatever factors they are, that was strongly correlated to a stock's price movement, as opposed to looking at all the fundamentals. Frankly, even today, many analysts still don't know what makes their particular stock go up and down. So the fundamentals would be things like, oh yeah, employment is up, oh no, it's down, so the stock should do this. End of story. Analysis complete. So what he's talking about, he's going to be looking at all of the factors. So these could be technical factors, this could be sentiment, and this could be how people over or undervalue a certain thing. And one thing that he speaks about is how he uses different sectors within sectors or within the market to give him an idea of which sectors or which markets are going to move. So he uses correlation within the market. So these factors, like, all right, if pharmaceutical stocks are going down, it means that construction stocks should go up or something like that. So he uses certain factors like that through his knowledge and understanding of market conditions. So this is pretty cool. And let's move on. The way to build long-term returns is through preservation of capital. Okay, thank you for the same quote. Soros is the best loss taker I've ever seen. Again, Soros. He doesn't care whether he wins or loses on a trade. If a trade doesn't work, he's confident enough about his ability to win on other trades. This is a very key thing to have. If your trade doesn't work, you have to be confident enough that you win another trade, that you're able to walk away. So there are a lot of shoes on the shelf, wear only the ones that fit. If you're extremely confident, taking a loss doesn't bother you. Wow, taking a loss doesn't bother you because you make it back. And this is the same type of perspective Linda Rashke has. And she is a woman who is into commodities trading and trades different things. But what she says is that like every time she takes a loss, it's okay because she's confident that her whole method works and that she's gonna make the money back. So this is how it's supposed to be, and this is how it goes. All right. So everyone sort of lives with their rulers in the past and doesn't look at coming changes. So everyone sort of lives with their rulers in the past and doesn't look at coming changes. Yes, so everyone is an expert of what has happened, and usually they believe that what has happened is what will happen. And this is the whole premise that we have with price action and technical trading, that whenever you are confronted with area of resistance, go short, because that's happened in the past and that's what's going to happen. But that's not the case. So this is what he's talking about, that people look in the past but are not able to look at what can change in the future. And this is where he makes money. So once you make a lot of money, it's incredibly enjoyable to give it away. It's a way to satisfy the soul. That's cool. All right, so these quotes are from azquotes.com, and this is it, so you can check those out. All right, let's move on. So today is just his so this video is just about learning from the Druck. If you're running a business for the long term, the last thing you should be doing is borrowing money to buy back stock. Yeah, so this is a recent quote, and I'm pretty sure it's about the stock buybacks that have been propping up the economy for a long number of years. So definitely he's against those. So for 30 years I've been responsible for managing client money, and it's been a joy, but at some point I need to move on. 30 years is enough. I've always loved to play games, and investing is one big game. You need to be decisive, open-minded, flexible. Alright, whenever I see a stock market explode 6 to 12 months later, you're in a full-blown recovery. Alright, this one's cool. Alright, part of my advantages is that my strength is economic forecasting. But that only works in free markets when markets are smarter than people. That's how I started. I watched the stock market, how equities reacted to change in levels of economic activity. And I could understand how price signals worked and how to forecast them. Wow, this is a gem. So through forecasting in free markets that are smarter than people, meaning that they're not manipulated, that's how we started. Watching the stock market, reacting to price change, understanding price levels and economic activity. So you have to also know the fundamentals, because come on, like even though he's using other factors, this man is really aware of the fundamentals. And I could understand how price signals. So what's a price signal to you? Right? A price signal. So he came at the end, it was about understanding price signals and how they work and how to forecast them. So he went full circle because he's forecasting, right? And his strength is forecasting. So forecasting, price signals. So this is the thing, to understand how price moves and what the signals are. I believe good investors are successful not because of their IQ, but because they have investing discipline. Wow, this is very true. Discipline is very true. But what is more disciplined than a machine? Yes, true. A well-researched machine can make many average investors redundant, leaving behind only the really good human investors with exceptional intuition and skill. Wow. Wow. So this is why people are really afraid of the bots, because the bot has more discipline. So if a human has discipline, it's an advantage. But a machine is endowed with rules. Like, that's what it is. It's a discipline. That's what it is. That's what it is. A well-researched machine can make many average investors redundant. Isn't that true? It's very true. And that's not even an argument, right? Alright, so okay, I clicked on that by mistake. So I want to go back to that because I don't want to open too many pictures. Alright, where were we? Yeah, leaving behind only the really good human investors with exceptional intuition. So he uses intuition as well as skill. So discipline, how do you define discipline? So having discipline, what is that about? So let's actually look that up. All right, let's look that up. Let's look that up. Let us look that up. Not look it up. Okay, we'll look that up. We'll look that up. All right. So all right, no, wrong page. So so you need intuition. So intuition, because this is very tricky, because when you tell traders to be more intuitive, it's like you're telling them to like be more impulsive, like, you know, go with your feeling. It's all bohemian, you know. But what she actually needs to do is to have discipline. So how does discipline and intuition relate to each other in your opinion? Because I feel like intuition is more free, like it's like has no rules. All right, so we have the relationship of intuition. Intuition is like when you have your own feelings, and discipline is when you disregard feelings and only work on rules. So this whole thing is a skill. So what's the real skill? So the real skill say that 5 times fast. Real skill is to have discipline. This is what the real skill is. And to be more like a machine. Alright, so if machines do everything well, including allocating capital and resources efficiently, can that be deflationary? Can that eliminate poverty? I don't know. It's hard to be very optimistic if you look at how humans have behaved historically. It's hard to be very optimistic if you look at how humans have behaved historically. Wow, interesting. All in all, I don't think robots and greater automation can bring about a utopian world as I imagined it would as a kid 50 years ago. True that. Alright, so let's just look at this skill, discipline. So this is Etymonline. It's a website on etymology, which is the roots of words and stuff. So discipline is chastisement, punishment. Alright, so the market actually enforces discipline. It punishes you whenever you're wrong immediately, without remorse. And teaching, suffering, martyrdom. So learning, knowledge, an object of instruction, knowledge, science, military discipline, pupil, student, follower. So it's a disciple, alright, discipleship. So meaning treatment that corrects or punishes is from the notion of order necessary for instruction. So discipline is about order necessary for instruction. Branch of instruction or education is a discipline. So trading is a discipline. Trading is a discipline. And trading is a system of rules and regulations. So the skill is discipline. A system of rules and regulations is discipline. Trading is a system of rules and regulations. It's discipline. It's a discipline. It's a branch of instruction or education. Military training. Notion of training, follow orders, orderly conduct is in training, system by which the practice of church is regulated. And All right, pupil, student, follower. Yeah, usually everyone in trading is put on by some type of mentor. Like George Soros had Stanley Druckenmiller, he had Karl Popper and stuff like that. Warren Buffett had Benjamin Graham, yeah. Instruction, teaching, learning, object of instruction, military, and then discipline, penitential, chastisement, and that's what we got. Alright, so that's what it is. So this is the skill we need to have a system of rules. Good debt growth is when you borrow money and it goes into the real economy. You can do capital spending, you build businesses. Alright, yes. I love being around kids. Oh yeah, I remember this quote from Forbes. I think old people like Hillary I shouldn't try to be cool with social networks. Okay, yeah. I don't like the repeal of the estate tax. Why not? Okay, cool. Bitcoin is like everything else is worth what people are willing to pay for it. Yes, very true. Once an economy reaches a certain level of acceleration, the Fed is no longer with you. The Fed, instead of trying to get the economy moving, reverts to acting like the central bankers they are and starts worrying about inflation and things getting too hot. So this goes in hand with with this. Whenever I see a stock market explode, 6 to 12 months later, you're in a full-blown recovery. So this goes hand in hand with that, and it's talking about the federal banks and how they affect acceleration. And when the market is too fast, they worry about too much inflation, and they make sure that it moves down. And when it moves down, he correlates an implosion in the market to recoveries in the market. Boom bust cycles. So he's talking about boom bust cycles, and he's talking about the central bank's participation in that. Okay. So I've always loved to play, because I missed this. I've always loved to play games, and face it, investing is one big game. You need to be decisive, open-minded, flexible, and competitive. Yes, yes, yes. This one's a good one. You have to be decisive, open-minded, flexible, competitive. Wow, this is worth this whole thing. Yeah, so you have to be decisive, open-minded, flexible, and competitive. All right, that's great. I like it. I really do like that one. Like, I mean, it sounds very, very simple. It sounds like you've heard it before, but it's good to hear it from him. You know, you need to be decisive. So many opportunities are missed if you hesitate. You need to be open-minded. You need to be, open-minded. Like, even right now, I'm pretty sure you're open-minded. If you're listening to me, you're open-minded. Flexible, which means that what's right could be wrong the next second. You need to be competitive. Very true. Very true. So I like it. It really resonates with me. And I'm glad I went back to find it. What a company's been earning doesn't mean anything. What you have to look for is what people think it's going to earn. If you can see something in 2 years is going to be entirely different than a conventional wisdom, then that's how you make money. Yeah. Their current earnings are nothing. What you're looking for is future earnings. If you can see something in the future different from what people see it today as, that's how you make money. Nice. I've given myself a Tesla for my 60th birthday. Carried interest. You're making some money on somebody else's capital. It's not your own. If that's not income, I don't know what is. I don't put Tesla in the Amazon category. They have not proved that to me. as a financial model and an economic model, it is going to work. All right, I'm sorry for butchering that statement. I don't really like hedging. To me, if something needs to be hedged, you shouldn't have a position in it. Haha, nice. He doesn't hedge with all those returns, but he goes in when he's certain. You can be far more aggressive when you're making good profits. Yes, very true. If you're extremely confident, taking a loss doesn't bother you. I love Amazon. A few times that Soros has ever criticized me was when I was really right on the market and I didn't maximize the opportunity. Soros had taught me that when you have tremendous conviction in a trade, you have to go for the jugular. Same thing as this. Alright, let's see the second page. Alright, so I think Bezos is incredible. Hey, he really likes Amazon and Bezos. The way you create deflation is you create an asset bubble. This goes back to that issue with the central banks. Every serious deflation I've looked at is preceded by an asset bubble, then it bursts. Earnings don't move the overall market. Yes, I've been looking for this one. Alright, this one is nice. Earnings don't move the overall market, even though we're looking for future earnings, right? But they don't move the future market. It's the Federal Reserve, these guys who create bubbles, these guys who create inflation. The Federal Reserve Board focus on the central banks and focus on the movement of liquidity. So liquidity, what is that? Most people in the market are looking for earnings and conventional measures. It's liquidity that moves markets. Okay, liquidity. This is the expansion or contraction of the money that is in an economy. Liquidity. So this is influenced by the Fed and their operations. What are they buying? What are they selling? And what are they targeting? And this creates moves in the markets unlike anything else. So this is where you have to focus your attention. So the first thing when I got into the business, not from my mentor, was bulls make money, bears make money, and pigs get slaughtered. I'm here to tell you I was a pig, and I strongly believe the only way to make long-term returns in our business that are superior is by being a pig. Yeah. Yeah. Soros is the best loss taker. Alright, we've already seen that one. I don't think Donald Trump is Ronald Reagan. Neither do I. They're two different people. Ronald Reagan lived in a different, yeah. In my experience, the more successful an idea is, the easier it is to fund it. In philanthropy, it's almost harder. With my business, the way you make big money is you find a great management team and a good concept and you stick to it and you add to it over time. In philanthropy, there was more this idea that once an idea was formed, you moved along. If you're early in your career and they give you a choice between a great mentor and a higher pay, take the mentor every time. Yes, it's not even close. And don't even think about leaving that mentor until your learning curve peaks. Very true. Words from a billionaire. There's just nothing to me so invaluable in my business, but in many businesses as great mentors. Nice. Yeah, so this is how we wrap this up. So these are the lessons from Stanley Druckenmiller and George Soros. Yeah, he was plugged in there a lot. And this is from Brainy Quotes, all right? And Brainy Quote and AZ Quotes. And for more of these, we will have to check out the website, the website of, no, not the website, I'm sorry, the book, The Market Wizards, which has a whole chapter on Stanley Druckenmiller. So this is his family office, okay, that he manages, and 3 billion, 62 current positions, 5 opened, 10 closed. So Duquesne has disclosed that to the SEC. So these are like real things. So portfolio managers are listed as Stanley. Okay, so these are the actual assets under management. AUM is the value plus cash, which is not disclosed. Alright, so he is invested in all of these. Okay, so Netflix. So this form was filed February 14, 2020. Alright, so we have all of these things: Microsoft, Netflix, Russell 2000, Uber, Treseda, 47 Inc. So, and some pharmaceutical company. So this is basically his portfolio, and they're not telling us other information. Oh yeah, so you can look at all of this stuff. So this is from this website. Pretty interesting. Alibaba, Amazon. So this is from 2019. So this is 2019 on the 12th, so it's the 31st. So this is the information that we're getting, and this form was filed in 2020, and we can see the full transaction history over there and things such as that. So yeah, so I think yeah, so we'll just say this is the Duquesne Capital, the right? The US dollars reported portfolio value, right? Which keeps on growing from this person we're just learning from, and this is his money that keeps on flowing. Yeah, so I guess we've gone full circle now. And we'll stop here. So thank you for spending this time with me and with Stan. Yeah, so for more information, get the Market Wizards book, read that. I'll make another video on that interview, particularly in the future. Right now there's so many things that I'm getting in order, so please be patient in terms of that. For now, this is really dense and bulky, meaty, fleshy enough so that we can chew on that for now. And I'll see you soon, and just check out any of my other products, my other books and stuff like that you might be interested in. But besides that, I'll see you soon. Take it easy. Oh